Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at three of the FTSE 100's big mining stocks. And I start off with Rio Tinto, where we're actually looking rather bullish in the sense that there are multiple buy triggers here on the charting front. We've got an island bottom formation here. We've had an unfilled gap through the 200-day moving average, taking the shares up to sort of 3-month resistance there. And actually, it's even more bullish given the way that the gap has come through a falling 200-day line, currently at £31.15. So basically, we've got a great setup here in terms of going long at current levels. The stop loss would be, say, an end of day close below the 200-day moving average, so you're not really risking too much. And the upside here could be as great as the top of the June price channel at 36 pounds rather, which gives us around £5 of upside for probably less than £1 of downside. So a decent risk reward buy setup there, and just looking surprisingly good given the way that obviously the gold price is not exactly looking very chirpy at the moment. But for a change, it's the big miners that seem to have something going in their favor on the technical front at the moment. Switching to BHP Billiton, and in fact, at first glance, it probably doesn't look as though we've got a great setup here, in the sense that there's a sort of falling trend channel here from the beginning of August. We've got falling 200-day and 50-day and 20-day moving averages, and a sort of a spike failure through the 50-day line at £18.83, and then we've come back a bit. But the key here may actually be this gap from July. The floor of the gap is at £17.53, and the low this month so far for Billiton was £17.60. So the shares try to fill that gap, try to come back there, and have so far failed to do so. What you should note from a technical perspective is if you ever see a failed gap attempt, a gap fill attempt, then this is a very bullish signal. And so therefore at the moment, any weakness towards the 1753 area can be regarded as a buying opportunity, probably for a retest of the £20 level later in the autumn. So actually, even though it doesn't look it at the moment, we have a very strong setup for BHP Billiton. The last of the trio is Anglo American, where we have probably a more conventional situation. The shares made a sort of floor around £12 at the start of the summer. I've been trying to build up ever since. Initial failure at the 200-day moving average would be negative, but we do have this a rising trend channel from June, and probably at the moment you can say, at least while there's no breakback below the 10-day moving average at £14.98, there is scope for being long and for going for another retest of this resistance area towards £16.50, maybe £17, even if the shares then fall from there. So Anglo, the less exciting of the three, but still in a constructive phase. That's it for me. See you next time.